As we unpack your markets now in detail, Jameel Ahmad, Global Head of Currency Strategy at FXTM, is also joined by Bright Khumalo, Portfolio Manager at Vestact Asset Management. Gentlemen, good morning. Bright, good morning to you, bud. It's been a week where, perhaps even if we talk about just last week, about 9 days of gains and then 2 days towards the end. Perhaps the JSE also rallying a little too hard there?
No, I don't think it's rallying too hard. I think, we still got a long way to go here in terms of gains.
Is that because we should be in record territory beyond the 61,700 odd that we have as a record? Should we be past that point right now?
Look, to be fair to you, there's no basically a market that deserves anything. We don't have the birthright to be at all-time highs just because the rest of the world is at all-time highs. Yeah. It's all a story of the underlying economy and how it does, and obviously the companies that operate in that economy will reflect the strength of the economy. And unfortunately, the JSE isn't doing so well because most of the SA Inc. stocks are not doing well due to the subdued economy that we've seen in the past 3 years.
It used to be a case, however, of companies doing well despite the economy. Now it's because of the economy that we don't do well.
Look, so what you're referring to is the fact that a big chunk of our earnings, I'm talking about hard earnings of the JSE listed stocks in South Africa, actually made offshore. We're talking about companies like Richemont, Naspers, the list goes on, AB InBev. All of these companies make more than 80% of their earnings offshore. So yes, that makes sense. And all of those companies at the time were doing well. So that's why the JSE has been climbing. But now it's more of a local story because, all the growth that, was easy basically to gather from offshore, that passes, that boat is sailed. So it's more of a local story now. The crunching needs to happen here locally.
The equity story will always be revolving around Naspers in one way or the other.
Of course.
It's a behemoth of a stock.
Of course. Close to 30% of, the big index here locally, the top 40. And, when Naspers sneezes, everyone catches a cold.
Yeah. How much more of that cold can the JSE take, however? We've seen things happen, particularly with Tencent, and the moment anything happens there, it affects South Africa massively. And obviously we know that sways the market a lot.
Yes, I guess it's more of a 10-cent valuation story. And if we draw parallels basically to the big the technology bubble in the late 90s and where we are today, it's a totally different story because back in the days, anything that has .com in it, you could do no wrong. But the big thing is that there were no earnings underlying those businesses. You look at Tencent today, you look at Facebook, you look at Google, all those companies are trading at the highest at a forward PE of 40. So, and we're talking about companies that basically generate most cash than many other businesses here in the world. And for example, Google and Facebook alone, they own more than 80% of the advertising space on earth. And you know who the losers there? It's traditional media.
Wow. That kind of tells you a lot.
Exactly.
I wanted to head into some company news as well now. Hot off the press, not so long ago, Bidvest releasing their provisional financial results for the year ended 30 June 2018. Just a quick update on those. A few salient features. Trading profit going up 8.2% to 6.5 billion rand. 5 of the 7 divisions grew trading profit. That's despite challenging economic conditions. Strong earnings growth. Headline earnings up 11.9% to 4.1 billion rand. An increase in headline earnings per share as well by 11.1%. Clearly a strong balance sheet there. Cash conversion of 106%. With continued strong investment in South Africa, with 3.7 billion rand spent on acquisitions. A final dividend declared of 301 cents, up 14%. On the face of it, this looks like a great set of earnings.
Yeah, because it is a great set of earnings coming from a very strong set of earnings the year before. This is a very interesting story because Bidvest, they own basically everything in South Africa. It's the most SA Inc. of SA Inc. stocks. Yeah, we're talking about Steiner, cleaning, delivery trucks, everything. These guys
even
are there.
Catering.
You will find them literally everywhere. And this is very impressive to allude to your first point about this not being a great, economy to operate in, because we haven't seen the growth we kind of want to see. But the big growth, I've always argued, comes from tourism, right? And these guys are big in playing into that sector as well, and actually facilitating that sector and the hospitality sector. So they're doing very well as a result. And you can see it from the basically the share price that it closed up 4% on Friday to show that this was definitely way beyond expectations in terms of the numbers that they're printing, and it's really impressive to say the least. And after the split between Bidvest and Bidcorp, the share price that has performed exceptionally well, even though we always make a joke about
this, move on their part.
Yes, was Bidvest, which that has unlocked a lot of value for shareholders who've held on to those.
Sure. Jameel Ahmad, Global Head of Currency Strategy at FXTM, also joining us. Jameel, let's talk about that rand picture, 1471. It just seems to get weaker and weaker. I don't think anybody expected it to still be at this point, surely now.
Good morning, and thank you very much for having FXTM as always. So the emerging market sell-off, it looks like it's going to get a little bit worse this week, and with that start in the Asia trading session. Indian rupees looking at risk to making another all-time low. Indonesian rupee only 1 hour ago hit its lowest level since the Asian financial crisis. And what it is investors are really selling the currencies with a very high current account deficits, which includes Argentinian peso. Obviously, there's been a currency crisis in Argentina. So if you all know what's going on there. Indian rupee, Indonesian rupiah, and actually the South African rand falls into this basket of currencies that is known to have a high current account deficit. And this is where the South African rand is also suffering from the emerging market sell-offs elsewhere.
One would have hoped that we wouldn't be this weak at this point in time. Is it South African fundamentals, just the emerging market picture, as you say, or is it the fact that there's also a lot of US strength that still seems to be seeping through quite a bit?
The U.S. strength in the dollar does also impact the emerging market currencies, but generally speaking, there's a really weak sentiment towards the emerging markets and the emerging market sell-off, which has actually strengthened the dollar somewhat this morning, it appears. And I would say it's more the emerging market sell-off because of current account deficits and because of currency crisis fears in Argentina and Turkey. That's what's weighing on the sentiment of the South African rand as well, because it's caught up in that mist.
So that Argentinian mix is certainly going to hurt.
I'm sorry, can you repeat that, please?
Just Argentina itself, that's still certainly going to help hurt. It's headed off to Washington, to the IMF, to go propose a new loan deal. That's going to hurt.
Absolutely. So the Argentine peso obviously hit a crisis last week, and the central bank had to raise interest rates to 60% at the end of last week to actually stop the sangren in the Argentine peso. But what it has done is woken up investors to what are really weak domestic finances, some of these emerging markets, Turkey, Argentina, and that's where the South African rand has fallen into this pile of really weak emerging market sentiment at this time.
Need to pull ourselves out of it. Jameel Ahmad, Global Head of Currency Strategy at FXTM, really appreciate your time this morning, 7:15.